What is up everybody, Gifford here and welcome to a late night upload, and today I want to talk about how I'm losing 18,000 New Zealand dollars or around about 10,000 US dollars in the stock market right now. So the agenda of this video, we're going to talk about my portfolio performance chart, then we're going to have a look at the Interactive Brokers losses in that account. We're also going to go over the numbers breakdown and where those losses are incurred. We're also going to see the two stocks that I'm currently invested in, which are high risk. And then we'll finish it off with my Sharesies test portfolio and what I'm doing there, and then end it with a summary. So first up, we have my Interactive Brokers performance chart, and this shows you what my current return is from the brokerage itself. So you can see that my 1 year return is recorded as minus 44.61%. So we can see right now that the portfolio with those losses currently is at 20,328 US dollars, and that roughly converts to about 31,604 New Zealand dollars. Now later in the video, when we go over the numbers, you'll see that the options premiums that I get paid hasn't been accounted in the losses of this 44%. Also, just looking at the graph, you can see that around about June 2022, I was actually break even in this account while I was learning how to do options. So I was doing pretty well. It was going up and down, but I wasn't losing a significant amount of money. Now, unfortunately, when we went to February, I decided to go pretty risky in this account and started using really risky stocks to do the portfolio. And as we've had this downturn, and if we follow along, we can see that I have tried to recover the account, but obviously the things just got worse and worse. Obviously with the strategy and going high risk, it hasn't really ended too well, and right now we are in a significant loss of minus 44%. So having a look at the positions and the losses, we can see that the unrealized loss in this account is 11,400 USD, and you can see as a screenshot of that. We can also see that the portfolio is worth 20.3k USD, and that's under here under net liquidity. And the two stocks that I decided to gamble with in this portfolio was AMC stock, which is high risk short squeeze play, and the other one was Sava stock, which was also high risk biotech play. And looking by the screenshot that I've got here, we can see that I've got AMC and I've got 420 shares of that, and the cost basis just tells you the total cost that I bought it for at the time, which was the average price, which was $25 a share, and 420 shares, so that equates to that amount there. But obviously the new price now that it's currently at after this big downtrend has been happening is at $14.53 of recording this, therefore that's where the losses have come in. Now we look at Sava stock, I've got 400 shares of those at the moment, and the total cost when I bought them is $14,577 US dollars, and that I bought them at an average of $36.44, and you can see here that they've been significantly down as well at $20.32. So as painful as this is to share, but this is what I do on my channel, showing you what the losses are and where they've incurred. We're going to go through the numbers of exactly how it's worked out and how much in trouble that I am in. So first, looking at AMC stock, we can see that the 420 shares, if you multiply that by $25 an average share, it was $10,500 when I bought it at the time. Unfortunately, they're currently at $14.53, so if we multiply that out, $14.53 by 420 shares that I have, therefore it's only $6,100, and that means that I've lost $4,400 in those shares because it's dropped that much. If we then go over to Sava stock, so I've got 400 shares of those, and I bought them at $36.44 average. That equates to $14,600, but currently the share price is significantly down at $20.32. So if you multiply that by 400 shares, you get 8,100. Therefore, I've lost $6,500 in those shares right now. So obviously this is unrealized gain, so I haven't sold any of those shares just yet for a loss. So you got to take that into consideration. This is the current value right now in the market. So here's some obvious questions that I'm going to have to answer is why did I invest in two stocks, particularly two high volatility stocks? Now before you start ripping into me, there was a whole plan into this. So they are very high risk stocks, but they're also high reward, and I knew this at the time. And this time it simply did not work out. So these two stocks that I invested in was definitely going for a reward of 100% gains on these events that I was hoping to get, but obviously that hasn't happened, but that's another video for another time. Fortunately, the strategy I used of using options tradings was actually very good as it's minimized my losses, and we're going to go into that in the next slide. Also, for a bit of risk mitigation, I always like to have cash on the sideline, so I do have 8,000 New Zealand dollars or 5,100 US dollars in there in case we do have a big crash. I still have some money in there, it's just held in a New Zealand currency at the moment. So knowing I was going into very high risk strategy with only two stocks, which you should hardly ever do, you should really diversify your portfolio. But for me, I really wanted to see how the strategy was, and I was willing to lose a lot of my money to be able to play this for the risk and reward that I was going after. So in this table here, I want to show you why options trading gives you passive income. So unfortunately, it was in a declining market. I did lose a lot of money, but you can see here that it can be pretty profitable if you do it right and if you can actually execute the trades, which I didn't do properly. Now, this is just what comes with actually doing options in high risk stocks, that you do get a lot of premium, but that obviously comes with the risks. So we can see from January the 1st to 31st is how I've recorded these values. We can see that I made $6,260, but you can see that a lot of that was actually in fees. So what I've done with each table here, the main one to look for is where I've converted it into New Zealand dollars with the fees. So in the month of January, you can see that I was making $199 each week with roughly these two stocks and a few others that I was doing along the way. You can then see in February, I decided to step it up and I was making some very good money then, and I was making $547 every week. So the next month after that, which was in March, was a little bit lower, and that was $349 every week. And then obviously in April, I was only making around about the same amount, $369. And then we have May, and this is just the start of the month, so it's the 6th of May today for me. So I've only made about $40. So you can make money with options in a declining market, although since I'm new, I didn't really execute it right, and I'm still learning right now. So the next topic is how you measure returns, because that is pretty important when you're looking at this options portfolio. So there's many ways to calculate it, but I just follow a basic way without getting too complicated. We have an explanation here, but what we're going to do is we're just going to go over my basic way of how I do this, which is how much money I'll put in versus how much money that I would get out, because this also counts the premiums that I paid. So here, when I counted it up, I deposited a total of 30,000 US dollars, which equates to about 47,000 New Zealand dollars. And since there's been a decline and my portfolio is now not worth 30,000 US dollars, it's only worth 20,000.3, it's gone down by $9,700. Therefore, doing some quick maths, we take $9,700, you divide that by $30,000, times that by 100, we can see that the total loss that I've incurred in this portfolio doing this basic returns metric is 32.3%, not the 44.6% that we saw in the charts, because that did not include the premiums that I had. So while it's a lot better than what the chart shows, it's still a significant drop and a lot of money lost, which I'm not too happy about. But in this case, it was my judgment and error, and I just need to get better at what I'm doing, basically. So have a look at the AMC chart. We can see here that it's year to date, it is pretty much down by 44.61%. So this is where all the losses are incurred, and we can see that it had a big spike up here to about $30, and then it's just slowly declined here to this day. And again, when we look at Cassava Sciences, we can see that that too, the year to date, has been down by 56%. So it's not surprising that the stocks that I decided to play in, high risk, that these have been totally decimated. However, something that's comforting is that TTCF was actually a stock that I had a lot of money in. We can see here that that's also down by 48% in the year. So if I decided to go with that, I would still have the losses anyways. I guess I'm just paying the price of doing options trading in risky stocks during this declining market. So let's quickly go over my Sharesies portfolio and just show you what I'm doing there. We can see that I've got $1,291 in there at the moment. That's New Zealand dollars, and it's got a simple return of minus 30.92%. But if we go to settings and we count some of my sales in there, so by ticking this, include sold investments, we can now have a look at it, and you can see that I'm actually above, so that's quite surprising. It's at 1.38% even in this decline. And if we scroll down, now you're going to see some big changes. I did sell a lot of high growth companies at a loss, and I've decided to actually move into more revenue generating companies. So there is some that I've kept, and you can see some very big losses here at minus 42% in the ARC G fund. And then we can also see I bought a little bit of AMC in this fund as here as well. I've also bought other stocks like Disney and Alibaba, which is down. I've also wanted to buy the Vanguard fund, which is VT, in the stock as well for a bit of protection, and that is a index fund to try to stabilize this portfolio, and I'm going to see how that works. And we see here that I have Tesla, which is up by 92%, but that's from my previous investments when I bought it when it was a lot cheaper. I also have BNGO, which is at minus 50%, so that's another biotech play that's taken a pretty big hit. Right, since my portfolio has taken a significant hit, I've had to readjust my targets, so we're still going after the 20% return, so I'm going to try to aim to get this portfolio back up to 40,000 New Zealand dollars. And just remembering, this is not financial advice, my stock portfolio is obviously high risk, and it's only a fraction compared to my property investment portfolio, so this is not all the money I have, and just remember that stock market investing is very risky. So just to summarize, some of the things I've learned is that I have gone way too risky in these stocks. I'm okay with losing money in the stock market and try to understand, but these two stocks are way too risky, and I need to choose revenue gathering companies and focus on that a bit more, even though the returns, the weekly premiums returns, are a little bit lower. I do have a plan for my stocks if it keeps going down lower, so if it starts to go down to minus 65%, I don't want to lose the rest of my portfolio. It's still a lot of money to me. One of the things I did learn from this is that having two stocks is way too risky, so I want to build it up to 5 stocks, so therefore it's kind of diversified. And one of the good things is that there's a couple of value stocks that I'm looking at. One of them is Onsemi, so I'm just going to wait till there's further decline in the market to try to get a position in that one. But also we have the Tesla stock split and also the Google stock split, which hopefully I have enough money to do some options in those companies. And so they're good revenue generating companies, and therefore it should be a lot safer for me to play in those ones as opposed to these two. And as we know, even though stocks go down, they will eventually go back up again, or if they go back up, they eventually crash. So it's always good to have cash on the sideline to invest in case there is a big crash and take that opportunity like we had in the March 2020 crash. I've also learned that going after $500 a week of options trading income is way too high and way too risky, so I'm going to scale that back now, and I'm only going to look to get $50 to 100 New Zealand dollars due to the market downturn, and I should be able to achieve that. So that's only about 10 to 20% return with my size portfolio if it doesn't go any lower. And that also means that I can reduce the risk by then making my options a little bit lower away from the current share price and collect those passive income premiums. The general market is down because of the global events and what's happening with interest rates. As long as you believe in the companies that you do have and the plays that you are doing, and that they are fundamentally sound and that you've done all your due diligence, then you should really hold on to the stocks that you have and even buy them when it's lower. Just try to focus on gaining mental strength for the stocks that you have and keep learning more about the companies that you own. So anyway, that is currently what's happening with my losses and what my thoughts on it were. I thought I'd wanted to share that with you because it's significantly down, and this is a good time to share that on my channel. With that said, thank you very much for watching. Please hit the like button if you like this video, and to support the channel, subscribe if you're interested in this investing content. Feel free to add me onto Instagram because I'm also there and I post during the week. If you're interested in options trading, click a video at the end of this video. Otherwise, thank you for watching, and I'll see you in the next one. Goodbye.